the next, I think we have 30 minutes and at 10 past the hour. So what worked well in my group last time is we went around and did intros and said a little note about where we are in the fundraising process. So are you pre-seed, seed, how soon are you expecting a fundraise? And then what questions are on your mind? What would you like to cover in this topic? So those three things. Monica, do you want to start with a little bit about yourself?
Totally. So I am Monica Desai. I've been at Kleiner for the last year and a half. I actually moved out here from New York just late last year and to move to San Francisco. And while at Kleiner, I've been focusing on fintech and consumer. We historically have been focused on early stage, so Series A with a little bit of like later stage seed, I would say, and early Series B.
Great. And you have to jump 10 minutes early, is that right? At the hour?
Yeah, I'm going to have to drop right before 11. Sorry about that, or 11 Pacific.
Okay, no worries. And I'm Ashley. I'm on the consumer investing team at Lightspeed. Mostly early stage seed and Series A is what I focus on, though the fund pretty much does any stage and any sector. It's very broad. And we just announced yesterday $4 billion in new capital. So that's exciting. And I think, hopefully positions us well to support some really great companies in this sort of crazy time and downturn that we're facing. But would love to go around and hear from you. So if anyone just joined in the past few minutes, would love to hear your name, your company, where you are in the fundraising process, and then a question or two that would be helpful to cover in this panel. So maybe we can start with Rudd.
Sure. My name is Rudd Taylor with Object Limited. We're building the world's premier resale fashion market. We're a pre-seed company. We've been around for a year and change, and are currently putting together plans for fundraising in the next couple months.
Great. Let's see, Sarah.
Hi, I'm Sarah. I'm one of the students that's helping record. So junior at Princeton, studying comparative politics and computer science. Got to spend a summer in early stage VC firm and a tech startup last summer. So just super excited to learn more and hear what you guys have to say.
Great. Damola, did I pronounce that correctly?
Yeah, that was right. Thanks.
Okay.
So my name is Damola Gundepe. I'm one of the co-founders and the CEO of Civic Eagle. We help organizations, both companies and nonprofits, manage their government policy initiatives. So they use our software to lobby, advocate for legislation across the country in different state jurisdictions and federally. Where we are as a company, we raised a couple $1 million over the fall. That was our seed round. We were probably going to do a seed extension either this summer or early fall, kind of opportunistically. We were realizing pretty good growth. We still are. Moved that timeline up a little bit, so we're actually in the middle of a extension raise right now, mainly inside. And then a question for the group. How are the investors in the room working with their portfolio companies to kind of work with the management team on how to kind of ease anxiety and kind of mental health concerns with the team?
Great, important question. Maxwell?
Hey, my name is Maxwell, CEO, founder of Peelaway Labs. We design and manufacture multi-layered peel-away disposable bed sheets. So a fitted bed sheet, the elastic at the bottom, we're all familiar with. It has 5 peel-away layers on the top, 3, 5, or 7. We sell them to healthcare facilities around the globe. We've raised 2 seed rounds. So I hear you on raising an extension of a seed round. We've been around since 2017. We brought on a bunch of specialty disposable products. And we're actually thriving in this market. So this is a tremendous opportunity to learn from VCs for future funding, as we don't need it at the moment, but to build relationships. And we also sell products at retail for, we bring on disposable products that we believe in. And we've been selling facial masks for 18 months now. So this whole crisis has been a supply chain disaster for us. And I'd love to learn from you guys if you have any portfolio companies that do manufacture overseas, that do manufacture in China. Everybody sort of has the same hardship. So what are you telling them from your experience of maybe starting your own business or potentially other portfolio companies going through the same instance?
Great. Thank you. Jennifer?
Yeah, so I'm in the same boat as Sarah. I'm volunteering with Charlie. I interned at Union Square Ventures, and that's how I kind of am connected with him. Studying computer science, graduating this year, and going to work at Drift, doing and developing their startup program. But really excited to learn and hear from everybody because it's really amazing.
Awesome, thank you. Jason?
Hey guys, what a cool group. I am the founder of Taproom. We are a beer platform based here in Brooklyn, New York City. We're effectively a big beer distributor that for the first time ever also sells direct to consumer. The brands that we have in our portfolio, but also hundreds of others. As you can imagine, COVID has been sort of that moment where everyone realized they should be buying more of their alcohol online. So we are exploding, for lack of better words for it. So, we raised a small seed round, I'd say, at the end of last year, just over $1 million. And we're planning on really doing a big Series A until, early next year. Things were going very well before, but now I'm in a spot where, we're up probably 20x on budget. So we were thinking, no time like the present to double down on that. Obviously our lead investor from our seed round wants to play in, but would love, thoughts on this environment, launching a real Series A round in 2 weeks, turning it around quickly. Probably don't even have time to put together a real deck at this stage. It's going to be something easy. Just curious if anyone is thinking about doing something similar in your portfolio companies, just to, I don't want to say opportunistically take advantage, but sort of build their platforms up while they know that they have the attention of the consumers that they're trying to market to.
Good question. Cyrene?
I'm Sarah, I'm co-founder of Visible Health.
Can you maybe get closer to the mic? It's a little hard to hear.
Better?
Yeah.
I'm Sarah, and I'm co-founder of Visible Health, which really is trying to elevate the exchange that's happening between parents who are looking to each other for information on healthcare for their children. We crowdsource medical histories from parents. We pull the insights on the back end, and then we give it to parents of children who are in similar situations. It's inspired by my own situation with my daughter who had a medical condition. We started in October. We raised the pre-seed round in December. We are looking to raise between September and December. And my question is, we sort of are situated at the nexus of what is emerging as a term, which is family tech, but also a data company. And it's an area that I think some investors don't really necessarily intuitively play in. Because if they're a parent, they sort of understand it. If they have children in their life, they sort of understand it. And so I'm wondering if you might be seeing changes now because the struggles that parents go through are more in the media, and what we could do to sort of be at the front of that wave.
Great. And lastly, Kea.
Sorry, I was on mute. I'm Kea. I'm the founder of SwayPay. We are an alternative payment method like Afterpay or QuadPay that plugs into online storefronts and lets shoppers pay with social influence at the point of sale. So basically splitting their payment in part cash and part social posts featuring the product. We're seeing a swell in demand right now, given inordinate amount of time spent on social, plus merchants' demand for pretty much anything that'll improve their conversion rates and like sell through at this point in time. What I'd love, and we're pre-seed, we close our pre-seed, we have our heads down on product, and we actually have decided to pull the trigger on accelerating the launch. What I'd love to learn a little bit more about is your guys' general, I guess, advice on cash burn. I think part of my fear is, and I think a couple of you articulated it as well, is that when you have a surge in demand, you might prematurely kind of accelerate like we potentially are doing, and then we burn through cash sooner and potentially still don't find funds to, for follow-on capital or for bridge rounds or for post-seed or whatever you call it. given whatever the environment is for investors. So yeah, I guess cash burn would be great.
Great. Okay, I think I got through everyone. Yeah. So
Zach.
Hey, sorry.
Oh, hey, Zach.
How's it going? I just did this in Ashley's last breakout group, so this might be a little redundant for at least for her. I'm Zachary. I'm the CEO and one of the co-founders of GrowSquares. We use remote sensing technology and a lot of data science to engineer gardens that are personalized for people, contingent upon their location. We did a pre-seed last year that kind of took us until earlier in the year. We were about to close out our seed this year, and then our lead investor, who's a big strategic, put a pause on all their investments. And so that sort of had us scrambling over the last probably 2 or 3 weeks. In terms of questions, just like Maxwell, our supply chain has been a little bit disrupted. And like Jason, we've seen a tremendous amount of interest in the product right now. People are stuck indoors and looking for something kind of fun to do. So essentially our question is about if demand exceeds supply, the narrative that a company can kind of paint about not being able to produce product in the amount of time that we probably should, and strategies that a company can give to, say, interested consumers to sort of bide their time until we're able to fix our supply chain.
Great question. So I think I heard a few different themes. The first is around how we're working with our portfolio companies today on mental health, and how we're helping them to ease anxiety. I think that sort of also ties in with Kaya's question on cash burn. So how we're giving our companies guidance on cash. So maybe that's sort of the first topic, which is what kind of guidance are we giving to companies? And then the second topic is around, sounds like actually a bunch of you are seeing increased demand from COVID and a bit of a COVID bump, and some questions around, how to think about that. Should you pull together around and be opportunistic if you're running into supply chain issues? What do you do? How do you message that to VCs and to customers? And then there was Max's question on supply chain specifically, which I think kind of ties to that. So I think those two themes would sort of cover it. Monica, what do you think? Does that sound?
That sounds great to me. Yeah.
Great. Do you want to kick it off on what kind of guidance you guys have been giving your companies?
Yeah, I mean, one, I think the mental health question is like very important and really like overlooked in all of this. We have definitely taken, a very bespoke strategy across our portfolio. So basically every investor is spending time sitting down with the founders and the teams pretty much weekly right now, and oftentimes more than that if it's like a situation where something is changing very quickly, either to the upside or the downside. And because the information that we're receiving is changing, to the end of, maybe a month ago we were saying, prepare for the worst, but is the worst a couple of months? And now, for some companies, this could mean a hiccup in supply chain and or selling to enterprises for, 6, 8, 9, it's the 6, 9, 12 months. And so we're trying to create scenarios that, with them that will prepare for the worst, hope for the best. The positive thing, for a lot of companies, probably like you guys, is you're ramping into growth. And so you can kind of think about those as more flexible costs that you would incur along the way. And so we're really trying to help people help our founders think through, what the levers are that they can pull at each juncture, so that when we have these check-ins weekly, hopefully bi-weekly soon, you can adapt to what the market is telling you. If we have a soft reopen, that will change things, and so really just a lot of like nimble flexibility. That's on the scenario planning. And so you should have, your case of, I think even having visibility into 12 months of cash is positive. For a lot of companies, that's probably what is more likely. 18 months is obviously great. And so that's a lot of the scenario planning, and I can definitely go deeper into that. And then I think on the mental health side of things, it's part of these check-ins are also just checking in with people who are now, having to change the narrative internally, having to deal with a lot of stress at home, like trying to be thoughtful around that, and for them to also then be thoughtful with their employees and the messaging that's funneling through the companies. And I think, trying to be responsive is the number one thing. And then also, trying to create like new opportunities in this scenario for teams to spend time together. You know, we're seeing a lot of, obviously, I'm sure you're all experimenting with virtual happy hours, games, like coffee chats where you have people come in from maybe your advisors or investors, just things that make this time feel different, not only in a negative way, but maybe in a positive way. And then, you know, I think helping people find resources. We've invested in a mental health company that is doing free online therapy for folks, or group sessions. And so things like that, resources like that, we're trying to open those up more.
Yeah.
I'm happy to share.
Yeah, I would say we're doing similar things on the mental health front. So we're investors in a company called BetterUp, which provides coaches for folks in organizations, not really executive coaches, but for people like new managers or people who are kind of coming into to being a leader. And so that's one thing. We also have an executive coach network for the CEOs and for other folks at the executive level to tap into, and coaches that we've worked with and vetted in the past. And then I've seen some of our companies doing a work from home stipend. So they'll give folks, you know, an amount of money to buy a monitor, buy a more comfortable chair, like whatever you might need to make your home work environment a little bit more comfortable. And then I've also heard people are doing more frequent culture surveys and like pulse checks, temp checks, to hear how things are going for people and what's working, what's not working. And then at Lightspeed, we've actually been doing something pretty fun just to kind of, you know, continue to get to know each other and build up the team. We have like a #random channel on Slack. And so every day someone posts something called a daily brain break. And yesterday it was like, you know, tell us about your favorite artist. And, you know, some people posted artwork from museums, and other people posted their kids' artwork and talked about their kid. So it's kind of cute. I think the day before was like, what's your favorite book? One day was to post about your sibling or post about your pet. And so that's been a fun way to kind of just recreate the water cooler talk as much as possible. So yeah, that's what we've been doing. And then as far as how we're supporting our portfolio companies from a business perspective, you know, I'd say it's in phases, and I think we're sort of transitioning from one phase to another. So I think we've been in this phase where it's like, okay, like what is the situation? Just sort of understanding like what's the cash position, you know, how much marketing spend is out there, what are all the different like long lead time cash commitments, and how does that impact the balance sheet? And I think, you know, all of our companies have done that analysis and are in a pretty good spot of understanding, okay, like what's their cash position, what do they need to cut, and, you know, and how do they protect their team and the business and, you know, customers. And, you know, I see some of them sort of evolving more into the next phase, which is like, okay, now that this is what this is, and we're in this sort of odd position and uncertain environment, how do we make the most of it, and how do we evolve our business to, you know, maybe have more digital, more online offerings if it was something that had a IRL component, or how do we focus on a different set of customers, or how do we double down on one business line more so than the other. So, you know, I think this phase is really more about pivoting and figuring out how they can create some kind of advantage from what's going on and what their business is going to look like in the future. So that's been a big piece of it for us tactically. And then more broadly, you know, like Kleiner, because we're a bigger fund, we have a bunch of folks on the operations team. So there's people who are subject matter experts in marketing or finance or, you know, growth hacking, pretty much any non-technical function. There's someone who knows a lot about that. And so they've been able to be really great leaders in pulling together different functional heads from the portfolio companies together to talk about the issues and to brainstorm with each other, you know, because ultimately they're in the trenches trying to figure things out together. So we have a CFO Slack for all the CFOs in the portfolio, and a CMO Slack for the marketing folks. And that's been really useful for the companies to talk to each other and hear what's working and what's not working.
Yeah, I think the cross-founder, cross-functional, like those learnings right now are so key because everyone's figuring this out at the same time, you know.
Yeah, no, totally. Monica, I know you have to drop in a sec, so would be curious
Oh,
to
wow.
hear your thoughts on the question around what happens if your business is actually doing well now, and how do you kind of capitalize on the moment?
Yeah, I mean, I would say, people are aware that there are some businesses that are doing well. And so they're thinking about these trends. And so essentially investors are primed in some of these areas. So it won't come as a huge surprise. I would say that I would be cautious to over-index on being opportunistic, in the sense that at the same time, people have a lot of mind share going towards the things that we just described. And so you don't want to feel like you're trying to push something through, in like a 1 week, 2 week span. Like, I think I would be thoughtful about the fact that they're all people going through things. And so they're still going to need to see certain levels of proof points. They're still going to want to dig into the business, whether or not like you build out a full deck and everything. There are elements of the past that will pertain to now. And in some ways, some parts of the partnership may feel like there's more reasons to go through a full diligence process. So I would just cautious about being a little bit too opportunistic. We've definitely seen a few companies come through with that mindset, and it's just been hard for us to really get there if it's too fast. But that being said, like, people are excited about those businesses, and I think there's a feeling that we're seeing the future pulled forward. And so, you can tell that story and you can show why what's happening is not just temporary, which is exciting. But I do have to hop. I'm really sorry. It's really great to meet you guys. I am also available by email and stuff, so feel free to reach out, but I'll talk to you soon.
Thanks,
Bye.
Monica. Yeah.
Thank you all.
Awesome. So yeah, I would echo a lot of what she said on the opportunistic side. I think, it's sort of like those phases I was talking about. It sort of depends. Are you in phase 1 or are you in phase 2? And I think you want to make sure that you've gone through phase 1 and truly understand your cash position. You've reduced fixed costs where possible. You've pulled back marketing spend if that's needed, and kind of understand like what's the leanest way you can run to extend the most runway. And then figure out what you need from there. I probably wouldn't rush into raising more capital right now unless you absolutely need it, because I think VCs are just a little bit more kind of like waiting to see where things land in the next few months. Like, we don't have a great sense of where valuations are going to land. And so, you wouldn't want to get a bad deal now. So I think, probably most strategic to kind of wait it out and see where things fall, and make more progress on phase 2 around, kind of maximizing your options, identifying how you're going to double down in certain areas, and then doing that. And then as far as the narrative around where demand is outstripping supply, that's oftentimes a really good thing. I think with Rothy's, the shoe company that we invested in, they had experienced something similar. And so what we typically do in that case on our side when we're diligencing the company, and what might be helpful for you to do, is to model out what if you had been able to fulfill all of the demand that was coming in, what would the numbers look like? And so that means that you need to capture the data on what that demand is. And so usually people will have folks go through some kind of smoke screen, or enter their email to be on a list, or something like that, to understand like how many people were actually interested in this. So then you can sort of make the conversion to what this means from a revenue perspective. And we get that, and we understand that. I would say we've seen supply chain disruptions across some companies, especially those with supply chains in China. But that was sort of a month or two ago, and now it seems like those supply chains are turning back on, and things aren't as up in the air as they were a month or two ago. But I'd be curious, Max and Zach, it sounded like, or sorry, Max and Jason, I think you guys have both mentioned things around the supply chain. Would be curious what you've been seeing.
Yeah, my pleasure. As I was mentioning, we've been selling active protection masks, and the Chinese government has commandeered our factory for the past 80 days. There's no real end in sight. And then, of course, if there is an end in sight, where do we get the raw materials? Everything's price gouged. And, I sell these to Walmart and Walgreens anyway. And so the way to gauge, we have these massive commitments, as you can imagine, but we're sitting here. I'm not even wagging my tail or getting excited. If we can't do it, we can't fulfill it. We can't fulfill it. We spoke to, the owners of the factory and such. It's out of their hands. And so it's a bizarre situation. Just for the record, China is back up and running. So you're absolutely correct when you said that. My team in China, they say life is back to normal, which is very good just to hear, right? Just for news sake. So that gives us confidence that hopefully everything gets better sooner rather than later. The irony is these are made in Wuhan. Want to laugh. But supply chain's been a disaster because my sheets are made out of non-wovens, and so are masks, all made out of non-wovens. So we were thriving until we're not, right? We're totally sold out of everything, right? And there's nothing more we could do. I have some for my friends and family, but that's it.
Yeah.
So you're almost just a sitting duck where you kind of just start planning everything. Even though it's not in your control. That's the hardest part. There's no real control in it. So that's the situation we've been going through. But China is back up and running, just for the sake of news.
Yeah, that's great.
Yeah.
Oh, go ahead. Sorry.
Sorry. We have a semi-similar problem. So formerly our product was mostly made in China. When things shut down, we actually pivoted and moved things to Thailand. We have a lot of kind of associated sunk costs, a lot of tooling costs. That transition was a relatively expensive one. And so by the time things kind of get up and running, Thailand right now is on more or less a permanent freeze. And so there are little kind of sputters of activity coming along. However, in terms of the prioritization of customs brokers, of really kind of getting our product out, we're pretty low on the totem pole. And so it's just really difficult. Especially because there's an inherent lead time of about 3 weeks when things are loaded on the ship till they get to Newark. We're a New York company, that the product simply just will not reach the consumer or our 3PL company before it's distributed. Our issue, because we're a gardening firm, is there is just inherent seasonality, where if you can't make a window, you're sort of lost for that, more or less that year. You can push things out for a couple of weeks, but at a certain point, it doesn't work. So our big issue is we sort of have to capture things now, or pivot to ancillary or secondary markets that are really smaller, where you can kind of grow things year round.
I just want to add a quick note for manufacturing in China as well. I'm sure you prepared for this. Chinese New Year was happening anyway. So it's you prepare for the 30 days of no phones, no emails. They literally don't do anything. Everybody goes home, and then on top of this coronavirus, so if you do manufacturing, you get pounded twice because you have to prepare for the Chinese New Year, and then these tariffs are destroying us. If anybody wants to really know, so it was just a double whammy, and it is a bizarre situation.
Totally. Kaya, I think you were going to jump in with a question.
Yeah, Ashley, I actually had maybe this is an odd question, but given maybe some companies' opportunities to take advantage of a large upswell, something I also think about is its potential to turn the product into a fad, right? All of a sudden, for example, let's call it house party. You have all these people all on house party. Then when COVID is done, you just delete the app and go away, and so what kind of messaging, I'm sure that you have some companies on your portfolio too, that not to lean in so far to make you a fad and buy right after.
Yeah, no, absolutely. That's a great point. I think it's important for folks to think about consumer behavior and how consumer behavior is changing, and then how long will that behavior stick and last. And I think it comes down to what's the utility that they're getting out of the app, and how tied is the utility to the current moment versus how tied is the utility just to it being useful overall. So I think house party is a really good example of it's useful now because we're all stuck in our house. But I think telehealth is a really great example of something that, people may not have tried because they didn't know it was useful or because they didn't know where to go online, but that they've now tried because they don't want to go to the ER. It's the next best option is to jump on the phone or jump on a video chat with your doctor. And people are like, oh wait, this is so easy. And I don't have to go sit in an emergency room with tons of sick people, and I can get the answer that I need. And so I would think about like that. Is it that they now realize that something has long-term utility versus just it's a band-aid for COVID?
That makes a ton of sense.
Yeah.
Yeah, in the so in the beer space, 80% of consumers said before COVID they didn't know you could buy beer online at all. We ran a survey last week that that number's still at 60%. So for us, it's we know that there's going to be a swell in alcohol delivery purchases online significantly during this time, mostly because people can't go outside. And then it's like, how much is that dip that comes later? Is that ceiling really, really high and the dip will be less, or is it all going to be about the same? So it's a hard game to play. Are you playing, when you're looking at these investments and they're probably putting together, 3-4 year models or something, and there's that post-COVID drop, like, do you have like a offhand way of giving people advice on what to predict on the drop? I mean, it's definitely case by case. Is it just like a thoughtful way of thinking about it? What are you thinking there?
Yeah, that's interesting. I think it depends on like how much the bump is, and then sort of what percentage of that you think is people who will find long-term value from this. So no straightforward answer, because I think it really depends industry by industry. But I would say just kind of general advice when modeling is to create 3 scenarios, from less positive to most positive. And I would make what you intuitively think is the worst outcome, like the mid option, and really force yourself to think about what happens if things get a lot worse than you think they might get. Just because I think it's always good to be conservative in how you're projecting things, and to be ready for the worst, because we obviously don't know. And I know that's a little bit pessimistic, but I think important to also be realistic. So looks like we're getting booted in 10 seconds. I really appreciate all the engagement here and the great questions.
Thanks, Ashley.